Hello, everyone, and welcome to the Sustainable Finance Podcast. My name is Paul Ellis, and I'm your host for these programs about developments in this fast-growing industry. The insurance industry is one of the largest money management and investment sectors of the global economy, allocating trillions of dollars across the capital markets every year. AXIS underwrites insurable risks across multiple economic sectors and has recently launched a Lloyd's Syndicate specifically to underwrite the energy transition. In today's Sustainable Finance Podcast episode, I'm speaking with Joe Dutton, Energy Innovation Lead at AXIS, about navigating the risks and opportunities of the energy transition. Hello, Joe, and welcome to the Sustainable Finance Podcast.
Hi, thanks for having me.
We're glad you could join us today, Joe, and we've got a whole bunch of questions to ask you, so let's get started with those. First of all, Joe, how does AXIS act within the current insurance ecosystem to drive positive environmental as well as social outcomes?
Well, I think AXIS is doing this in three ways. One internal and two external. Internally, as an organization, we're doing all we can do to reduce our own emissions, to work on ESG internally. Is obviously a very important thing as how we are as a company. And then externally, obviously, as an insurance company, there are the risks that we're underwriting. And then there's also where we are investing our money. And in both of those areas, we're looking to be more progressive on the energy transition, on addressing climate change. And in particular, with the risks that we're addressing, as you mentioned, we recently launched the Energy Transition Syndicate at Lloyd's, which is there to help companies on their transition journey.
Okay, good. We'll talk more about that Lloyd's Syndicate in a moment. But first of all, tell us what the role of insurance is in the energy transition, and how do key stakeholders see this role evolving to help accelerate the pace of the energy transition?
Well, the insurance industry is in a unique position when it comes to the transition and climate change in general. Insurance, by handling risk and dealing with threats, we are on the front line of climate change and weather-related events, particularly as they get worse with climate change. But also on the reverse, the insurance industry is in a position to actually do something about it. The insurance industry has enormous amounts of capital at its disposal for investment, but also in terms of who we're helping with our insurance policies and how we're helping companies to decarbonize and move away from fossil fuels. We can play a fundamental role in shaping the economy and the energy industry as it's moving. A key part of that is working with companies to move away from fossil fuels towards cleaner, lower carbon technology. The growth of renewable energy is obviously a big part of that, but also new and innovative technology around the consumption and the production of energy is an area where insurance plays a really key role in de-risking of innovation and helping to scale up these new technologies and secure the investment that's needed to keep building them up.
Okay, thank you for that, Joe. Now let's go back to the Lloyd's Syndicate that AXIS has launched. It's specifically, as I understand it from you, it's designed to underwrite the energy transition. So what's the scope of this syndicate and what risks are inherent in launching it at this particular point in time?
Well, the energy transition is quite a relative term depending on who you're talking to. And I think a key part of the syndicate is not that it's a renewable energy syndicate. It's not a net zero syndicate. It's one that helps companies and countries on their transition from their particular starting point to where we do eventually need to get to with net zero. And that means there's a whole range of technologies that are in there. Some of them are from the renewable energy sector. So where you have solar, battery storage or wind farms, for example, but also it's more innovative technology around biofuels, biomass, and also infrastructure to support the energy sector. Subsea interconnectors, transmission lines, EV charging networks. The scope of the syndicate is very broad, but at its heart is something that we think is really important, which is where there is a demonstrable impact on emissions and a reduction in emissions because of the technology or the infrastructure that is being put in there. Now, obviously, we're very cognizant of the fact that different companies and different countries are at different places in starting their transition. And that's why it is relatively broad in terms of the types of things that can come in there, as long as the long-term direction is moving towards net zero and being aligned with climate targets.
So, Joe, as an insurer, what are the specific risks that you see that are holding back the growth of the renewables sector and the pace of this energy transition?
So I think one of the things, certainly in the last couple of years, has been the wider economic climate globally. Obviously, post-COVID, there was this sharp increase in inflation and interest rates. And then it had an impact in terms of the cost of labor, cost of fuel, and a further impact on the supply chains. Now, renewable energy is exposed to interest rates more than other types of energy. They're very capital intensive. Most of the money of the project lifespan over a renewable energy project is invested in the early stages in development. So that's made them particularly exposed to what we've had with interest rate spikes in a way that other types of conventional energy haven't had. But I think when we're looking at specific technologies as well, solar and wind have grown tremendously fast in recent years and taken a lot of people by surprise in how quickly they've been able to scale up. But that's come with some growing pains. It's important with innovation that you walk before you can run. But the pace of innovation has been so quick, it's caught some people out. And I think maybe there's a period here of stabilization with particularly looking at offshore wind, where the turbines are getting bigger and bigger. They're generating more and more electricity and generating higher returns for their operators. But it poses some kind of technical challenges in our understanding of these technologies. And for insurers in particular, we're dealing with things that are being built that didn't exist 5-6 years ago, which are being scaled up in new environments, new places of the world. And that presents some challenges in terms of, on the one hand, we want to make sure that we are ensuring the transition and making sure we provide the support that's necessary. But also there's a balance there between understanding innovative technology that's not yet proven at scale or is still moving up through the levels of commercial deployment.
Yes, Joe, as you're suggesting, what we all know that today is that renewables is an inherently innovative industry where the technologies are evolving so fast and new ones are under development all the time. I mean, I don't even recognize the wind turbines that are being constructed these days because a lot of them don't have the blades that the older ones used to have, and they're certainly much larger, and the composite materials that are being used for them now are just, it's amazing what they're able to do. So what kinds of challenges do these developments and the speed of this transition, at least from a technology standpoint, pose for insurers like yourselves?
So if we take offshore wind as a good example of this, there's been a real tussle in the last couple of years between a race to the bottom on price versus a race to the top on scale. And those two things don't fit together particularly well. Everyone in the supply chain needs to make money. There's a pressure on governments to make sure energy costs are falling, but also there's a pressure to keep building out the renewables that we need to reduce our emissions and meet climate targets. And there has been some tension there, and it's caused some issues with the types of technology being deployed and the scale at which they're being deployed. And in particular, the supply chain has struggled to keep up. So when we're thinking about the construction of a large offshore wind farm, you need specialized vessels to be able to install the turbines, install the blades, and then do the operations and maintenance. So it's not only innovation in the turbines and their manufacturer, but it's also innovation and investment that's needed across the supply chain to have the ports and the harbors that are needed to support the new vessels, which are big enough. And ultimately, we need to have enough people in the workforce to do these jobs. But one of the things I would say that out of the back of this quite bumpy period that renewables has had is that there is this remarkable resilience that has been demonstrated. If we think about the UK, if we go back 10 or 15 years ago, there was a general consensus in the energy industry, particularly in the fossil fuel energy industry, that renewables would only ever be a fringe source of electricity. They would never overtake gas or coal, that they may be providing some power around the edges, but ultimately they would reach a level and then things would stop. If we fast forward to today, in the first half of this year across Europe, renewables supplied more electricity than gas and coal combined, which was unimaginable a decade ago. And I think that speaks to not only the resilience of renewables, but also its strength in how, particularly with solar, it can be scaled and deployed much quicker. It's easier to install, it's quicker to install. And I think that's a thing that many people perhaps underestimated with the growth of renewables. And we can see that in terms of a lot of the kind of official administrations and bodies when they do their annual forecasts for the amount of solar and wind that's going to be installed around the world. Year after year, it lowballs what is actually going to be put in the ground. They underestimate how much is actually going to come through. But that does present challenges in terms of the multiple gigawatts coming online every year.
You know, Joe, all of these points that you've just been making are so important to, I think, people who are making investments, whether it's portfolio strategies or private markets or whatever, in the energy transition, because as you're suggesting, the technologies are advancing so quickly that it's hard to keep up with them sometimes, and the capital markets are struggling in that process, as are the regulatory bodies. I know here in the U.S., in New York State, for example, there's a big push to get offshore installations accelerated, but there's also a lot of pushback in the other direction from people who see this as an infringement on other types of energy, plus have environmental concerns as well. So from your point of view, give us the current status of the global energy transition as a whole, if you will.
The energy transition as a whole has reached a bit of a paradox. And depending on what side of the fence you are, perhaps you can pick your own conclusion. Last year, we had record high CO2 emissions. We had record high fossil fuel use, but we also had record high clean electricity production and record high new amounts of renewables being constructed. So as ever, two things can be true at the same time. And we see that they're perfectly encapsulated in that paradox. But we are reaching a tipping point, both in terms of public acceptance and awareness, and also from an investment perspective. So if we take the public acceptance one first, the US, particularly with offshore wind, is further back than where the UK and Europe was and is at the moment, maybe a decade or so. Mm-hmm. And I think it's interesting to look that in some of the most successful offshore wind markets in Europe, public engagement is the fundamental bedrock upon which the success of the industry is built. And that's something in the US that's perhaps even more important with the politicization that's there within the energy sector and how it really seems to cut through the different political and party lines, particularly as we are in an election year. So that's something that's really important in the development of these projects, engaging the public as early as possible and making them understand what's going on and bringing them along with you rather than imposing on them is really important. From an investment perspective, one of the things that's interesting is that despite the up and downs that renewables has had in the last couple of years, there is no shortage of investment going into the sector. Now, it might be coming from different actors than we thought it might be. We see a lot of private equity and investment funds putting in billions into clean energy, but the money's coming through, even on the understanding that the returns might be slightly smaller or spread out over a longer period of time than perhaps in oil and gas. But that money is still coming in, and there's an understanding that those investments are there for the long haul.
Joe, we do programs with a lot of different people from a lot of different sectors of the economy. And one of the areas where we're noticing a lot of controversy these days is related to hydrogen energy. There's all kinds of changes going on within that sector of the economy and a lot of private equity money being invested there as well. So with regard to the insurance industry's role in the energy transition as a whole, what changes are possible in the insurance industry's role to promote a more sustainable and equitable future for the global economy and the entire energy transition, including the need to support all of the growth of AI energy consumption that's going on right now?
Yeah, that's a big question.
Saved it for last.
Absolutely. So earlier this year, Access undertook a survey of 600 companies across the UK and US to take a temperature check on how they see the energy transition and also how they see the role of insurance. So of these 600 companies, it was split between energy producers and energy buyers. So we've got kind of both ends of the chains there. And a couple of the findings are really pertinent, in particular for your question.
Sure.
So unfortunately, the majority of respondents do not see insurance as a crucial part of the energy transition. And some of them even responded in seeing insurance as a block on innovation. And both those things are very informative and illuminating for us, but also quite worrying. And I think this is where we need to rethink how insurance is and how it should be perceived. I think all too often insurance is viewed from a procurement perspective, something that's just you go to at the end of an investment process before you start, and you're sort of box ticking as you move your way through, when actually insurance should be considered much more strategic. And I think having a better understanding of risk is really important for scaling up R&D, innovative technologies, and deploying the ones that we need. But obviously insurance has a really crucial role to play there because we are inherently based on risk as an industry. We understand very well what has worked in the past, what continues to work, and perhaps what things need to change in future. And I think that's really important for making sure we are moving forward with the innovative technology that we need to meet our net zero targets and tackle climate change. But one of the main issues with that is the speed of the transition. And this is a problem not just for insurers, but for policymakers, investors, and regulators as well, is that the deployment of renewable energy and the innovation in the sector is moving far quicker than people can keep up with in other industries that are on the sides of it and work with it. That's a problem because the technology can move quicker than investment cycles are moving, and it's moving quicker than perhaps insurers are comfortable with. So I think on the one hand, we need to be moving quicker so that we can keep up the pace with this technology that's advancing. But we also need to be working with companies on a much longer distance and longer journey than perhaps we're used to. The energy transition can't just be based around annual renewal cycles with insurance policies. We have to get more comfortable with working with our partners for 5, 10 plus years with not necessarily on, multi-decade policies, but having a relationship with insureds and project developers for a length of time that matches the length of their investment and for how long their project's going to be operational is really important. And that cuts across all the existing technologies as well as the more innovative ones that we're seeing.
Thank you, Joe. That was very helpful, and I think that'll help a lot of our followers get a better handle on how insurance plays a very important role in this entire energy transition and understand a little bit better how the process is moving and maybe even encourage them to interact with their own insurers to see what they can do about it. Joe, where online can followers of the Sustainable Finance podcast go to learn more about Access, and how can they reach you with questions about the issues that we've discussed in today's episode?
So on the Access website, we have the information around our wider energy transition offering, the Energy Transition Syndicate at Lloyd's, and also all the information and the report on the survey that we undertook with the energy companies. And also people can reach out directly to me as well with any questions or queries they have on the energy transition and insurance and what they may want to help them with their transition journey.
Joe, listen, if you have documents or links that you can send us that we can attach to this program on YouTube and on Bright and the Bright Talk channel, we'll be happy to do that so that our followers can dig deeper into the process on their own with the help of your documentation. I want to thank Joe Dutton and Access for joining me today on the Sustainable Finance podcast. Our followers can watch or listen to this episode in our YouTube channel and can join me again next week for another episode. Thanks again. This is Paul Ellis for the Sustainable Finance Podcast.